we want to hear from African business leaders here at Africa.com. And we want to hear the good, the bad. We want to hear their perspectives. We want to hear what it's like to be an African business leader, to have done business with the United States. Yvonne Ike, as I mentioned earlier, has been very helpful in assembling this panel of business leaders. Yvonne Ike of Bank of America. They have used their relationships to reach out to the 6 experienced leaders that we have. These leaders have been involved in doing business with the US from all sorts of perspectives. Some have investment from the US, some have actually engaged with the agencies we just heard from. Some have US clients and trade partners. They engage with the US in many, many different ways. And I think that it's important for us as we have this conversation to recognize that we are talking about partnerships. While the US is a very advanced economy, we want to acknowledge the tremendous success that Africans have had in the business realm, going back to the Ashantis, thinking about the tremendous operational expertise that Shaka Zulu demonstrated, thinking about how Africans have been able to create trade amongst themselves, amongst the African nations. And Africa today is at the forefront of an expansionist set of policies at the African Union to create the African Free Trade Agreement. While the rest of the world is moving into more of a protectionist mode, Africa is recognizing the benefits of acting as a bloc and what the economic benefits will be to Africa and its people for doing so. So we want to acknowledge the tremendous icons who have been self-made and those who have partnered with governments, local and international, to achieve their success. So with that, much like in the last panel, we are very privileged today, not only to have fantastic speakers, but to have fantastic moderators. And I'd like to introduce Hubert Danso, who is the founder and the chief executive and chair of Africa Investor. I'm sure everybody involved in this call today has heard of Africa Investor. The Africa Investor Group is a very important player in convening institutional investors in particular with respect to significant flows of capital onto the African continent. Hubert, like our last moderator, once I spoke to everyone on this panel, everybody already knew Hubert. He's had pre-existing relationships with pretty much every important business leader on the continent. And he was able in that way to very quickly figure out what needs to be said and what needs to be done on this panel and how to position what comes out of this conversation. I should mention that we are extremely privileged to have had so many members of the US government involved in the first 2 panels. And please know that the members of the US government are staying on for this panel to hear what you have to say, because this is an incredibly important opportunity. There aren't many opportunities to hear from leaders like those people on this panel with respect to what their experiences have been and what their recommendations are. This is a group of business leaders who span industries and span geographies, but all of whom come to this conversation with a great depth of experience in doing business both in Africa and with the US in a variety of counterparty arrangements. So with that, I'm going to turn this over to the very capable hands of Hubert Danso to moderate this panel. Thank you very much.
Thank you very much, Teresa, and good day, good afternoon, everybody. As Teresa mentioned, my name is Hubert Danso, and I'm the chairman of Africa Investor, also the chairman of the African Union's Continental Business Network, the CBN. I also chair the CFA New York's Global Asset Owners Advisory Council, made up of the US's leading institutional investors, pension funds, endowments, and foundations investing across the world. And it's my great pleasure to be the chair for this particular Hear It From African Business Heads Roundtable Dialogue. It's always a pleasure as Africa Investor to partner with Africa.com. You do incredible work, Teresa, and we're always there to support you. And it's another distinct pleasure to obviously chair this particular roundtable, which is really, as you say, going to communicate the views and perspectives of African business leaders on the opportunities and challenges of doing business with the United States. And hopefully we'll provide some guidance for those who are considering following in our footsteps. The panel is going to be structured into 2 parts. The first part, we're really going to, call on each of our business leaders to provide some just very high level introductory remarks and perspectives on doing business with the United States. And then secondly, we want to get a bit more granular and really ask everybody to share some very specific Africa-US business partnership proposals. This particular US-Africa summit is coming at a very interesting time and at a very pertinent time as the world grapples with the economic damage from COVID-19, causing all of us to, in many cases, review and reset our business strategies, partnerships, and explore new or deepen existing commercial relationships. We're seeing this play out on a daily basis in the rapid reconstellation of global supply chains and third-party business and investment relationships. This is really a seminal moment and opportunity for US-Africa business and investment partnerships. And I think it's, from what I've seen so far, clearly a moment that's not lost on the US administration, as can be seen from the existence and operation of the Presidential Business Advisory Council on doing business in Africa, the impressive panel that we've just had, and the very senior private sector participation and government participation in this particular summit. I think the words that came out of the McKinsey report were clearly not lost on the US administration or the private sector. The report stated very clearly that global business leaders who misunderstand Africa run the risk of missing out on the 21st century's great growth opportunities. It then went on to say, in our experience, the instinct of most business people is to underestimate Africa's size and potential as a market and overestimate the challenges of doing business there. So on this panel, you're going to hear directly from the continent's leaders, the most prolific business leaders from large and small companies, youth and women-led institutions, as Teresa mentioned, working across multiple sectors. And on the panel, let me just give a quick introduction. We have Mr. Admasu Tedesi, who is the president and CEO of TDB Bank. We have Mr. Bolaji Balogun, who is the chief executive officer of Chapel Hill Denham. We have Nwuneli, who is the managing partner of Sahel Consulting, Agriculture and Nutrition. And she's also the co-founder of AACE Foods and the founder of Leap Africa. We have Mr. Iyinoluwa, Aboyeji, who is the founder of Andela and Future Africa, and the founder and former managing director of the fintech business Flutterwave. We have Ms. Naa-Sakle Akuete, who is the founder and CEO of Shea. And we have Mr. Kuseni Dlamini, who is the chairman of the board of South Africa's Massmart holding. So to get us started, we are going to turn right now to each business leader to provide their introductory remarks and perspectives on doing business with the United States. And we're going to start with Admasu Tedesi, who is got a very star-studied career across many different institutions, both public and the private sector. And he's really transformed not only his own institution, but he's blazed the trail that most development finance institutions around the world are now beginning to take lessons from him about how they can reinvigorate some of their own institutions. So over to you, Admasu.
Thank you, Hubert, and thank you, Africa.com and all the partners. This very interesting discussion. We're very pleased to be a part of this. Very quickly, just a few words on TDB. As you've heard from Hubert, we are a financial institution. We're quite specialized. We cover some 22 African countries, mostly in Eastern and Southern Africa. We have a balance sheet of about $7 billion, and we finance several different sectors. So we're active in power and transport, agriculture, telcos, industry, almost all sectors. And of course, being a specialized financial institution, we do cover a lot of the sustainable development goals. About half of our portfolio is dedicated to the SDGs. And about 80% of our power portfolio is in the renewable energy space as well. So we are commercial, but we're very developmental as well. And we really believe in pushing the climate finance agenda. We do have a great story of growth, as Hubert has mentioned, and that really mirrors the great growth we've seen in Africa since the turn of the millennium. I think as Hubert was saying, it's not very obvious to to distant observers how much Africa has grown and how attractive and big the economy has become relative to where it used to be. And of course, we know that demographics are also going to be taking us further out in this regard. So we've been growing at almost 23% cumulative annual growth rates for the past 10 years. So we've got a very strong story, and we're very active. We work very closely with US agencies and also US businesses. But of course, there's a lot more that can be done, which is why we think this kind of engagement that's been arranged is really important, because we think the US has so much more to offer, and we believe Africa has a great deal to offer as well.
Fantastic, Admasu. I think the African Continental Free Trade Area, as Teresa mentioned, is really at the forefront of everyone's mind. But then when we just look at the time frame, January 1, 2021, just share some views with us about, how you're preparing as the TDB and how you see the continent from the private sector standpoint, getting ready to really take advantage of that opportunity, and then sort of help us understand the role or additional role, if it's not currently being played, that US institutions could support and provide in that particular process.
Well, the trade agenda of Africa, not just with the world, but with itself, has been an aspiration for quite some time. And I think what again is not obvious to many observers is how far Africa has begun to move forward in terms of this vision. So those, of course, who know, we've always had regional markets that have been looking to get off the ground. Now we have a continental market that's essentially been given life. It's going to take some time for it to move. But this is not just a piece of paper for those who are just wondering whether this will have a real impact or not. There's been also very strong infrastructure development happening at the same time in terms of roads, but also rail. Just to give some examples, we have about 3 mega railway projects that have been implemented and are currently under implementation just over the past 10 years. Still, some of them are ongoing. And you're talking about $15 billion investment. Most of these are in East Africa, in Kenya and Tanzania and Ethiopia. And these have begun to lay the groundwork for much more meaningful logistical movements that will make trade much more efficient and therefore more profitable. This is just one example. In the power space as well, we've seen transmission lines being laid across borders. Africans are trading power, not just goods, but also power in terms of that type of service. So there's a great deal happening. And I think as this infrastructure continues to gain momentum, I think American firms have a huge opportunity. Whether it's rail or power or telecoms, there's huge amount of content. Of course, the green energy agenda is going to also give impetus to more mining that needs to happen to support the minerals and the metals that need to support the support of the development of batteries. And of course, that itself will also give up lots of opportunities for investment in mining. We know the US has quite a bit of mining capability as well, in addition to the oil and gas that is perhaps better known. So the trade agenda is going to be very strong. We have regional markets. We have the common market of Eastern and Southern Africa. You're talking about close to half the continent that's already integrated through an existing common market arrangement. So there is a lot of integration that's been going on. It's very quiet. It's been under construction in terms of just getting the institutional frameworks and the infrastructure to work together. But it is a very promising indication of what can be achieved in the future to look at Africa as one big market.
Fantastic. And then finally, before I move on to our next speaker, we've heard quite a bit in this discussion already, and it's an issue that you're very familiar with. I think to the point now where it's almost being described as an infodemic in terms of this perception of risk or actual versus perceived risk on the continent. Based on the success that you've had and the engagement with the US institutions, it would be interesting to get your views and advice about how to address this issue of perceived versus actual risk, because there's quite a gap there. And it was interesting because just last week we heard from a former US diplomat, and they were explaining that to a group of SMEs that you really need to work harder on polishing your message and your pitch, because the type of investment that you're looking for versus the perception of the risk, even if that perception of the risk were real, you have a risk mitigant built in there by virtue of the makeup and the nature and the sheer scale of the market, that your returns would be protected. And that's what this former diplomat is now raising money in Silicon Valley and setting up offices right across the continent. And he attributes a lot of his success to actually being able to articulate and defend and motivate around the risk management approach. How do you go about it?
Well, you know, this risk perception issue is a very important discussion point, I think, for today, because there is a huge lag in terms of the reality versus how people see it. Just to give you a very practical example, we, as a bank, of course, that has to apply modern risk mitigation techniques, we buy various insurance products just in order to sort of optimize our balance sheet and ensure that we're in good order with the ratings agencies. We spend about $35 million in insurance products. And most of those who insure us are from the Lloyd's markets in the US, in the UK, sorry. And you know, you're talking about global insurance companies who readily buy up all of our risk mitigation instruments for African risk management. And we've had zero claims over 20 years, zero claims. And this is why whenever we put our offer out there, we get so much buy-in from these various companies who want to underwrite some of our risks. Now, this is the truth. It's very profitable to do that. Why? Because the reality is that the risks just don't materialize, generally speaking. Say that there's no risk, there's of course risk, and returns are always adjusted on a risk basis, but this is just a very practical viewpoint from our own experience, where we've managed to give comfort to our partners around the world that if you come in and participate in African risk, you will do well. And I'm talking about specific numbers. So I think really in the end, it's about distance and also about not applying oneself, not getting closer to the markets, talking to people and getting on the ground and looking at the realities.
And finally, do you think there are any products that Prosper Africa or the US administration or the insurance market could benefit from bringing in to address this mismatch?
Well, I think there is need for facilitation. I think if you look at other parts of the world that have done tremendous amounts of business with Africa over the past 10, 15 years, that has been partly because they've been facilitated by their own agencies and their own specialized financial institutions. So the Europeans are very active, the Asians are very active. We work with both the Europeans and the Asians. The Americans also have been present, but nowhere near as active and as interested from an appetite perspective compared to the others. And I think, for instance, just looking at US banks and US institutional investors who sometimes want to work with us, one of the complaints they have is African multilaterals or African institutions like us are not formally recognized by the US guidelines when one is dealing with multilateral institutions. So US investors and US banks feel disadvantaged, and they often lobby and try to get an adjustment or a reform introduced to deal with this constraint. But it doesn't create a level playing field for American firms and American banks. I know a recommendation has been made to the US Commerce Secretary to address this issue. And we're hoping that the US will begin to recognize African international banks so that we work even better and leverage the credit enhancement opportunities that come with that.
Yeah, fantastic. No, that's absolutely right. I'm aware of some of those submissions. And I think it also applies to the ability to engage with African capital markets and stock exchanges as well, which sort of certainly seem to be a little bit off of the radar. But I was encouraged to hear from certain colleagues within the US administration that they sort of recognize that economic and private sector related development assistance that does not create a link to the African capital markets is almost like putting water into a perforated bucket. So I think that the mindset is changing, and I think the advocacy of colleagues like ourselves and the local teams from these agencies, it will provide a lot of better insight as we move forward. But I think there is still a lot of movement within the administration to sort of take a more enlightened view in terms of taking a more sophisticated perception of Africa. And that's why I'm going to turn to Bolaji now, because I know that Bolaji works closely with the institutional investment community, both within the continent and the US. So over to you, Bolaji, just to sort of share your sort of general high-level views, and then just tell us about, you know, the experiences that you've had working with the institutional investment community in the US. Thank you.
Absolutely. Thank you very, very much, Hubert. And thank you also, Africa.com, for organizing this and giving us an opportunity to share a few thoughts. Briefly, our business, Chapel Hill Denham, is Nigeria's leading investment firm. And the firm, you know, is also Nigeria's leading alternatives asset manager. We like to think of our business as a business that's very much focused on areas that we believe are accretive, you know, to Africa and Nigeria's economic as well as sustainable development. We do this in 3-4 particular ways. We do it primarily through the work we do in infrastructure financing, in green financing, where we've, you know, led the sovereign's, you know, green bond issuance, also led the issuance of the first, you know, corporate green bond on the continent for AACE Bank, one of our local banks, through gender lens investing, where we're working with female as well as youth-owned businesses in Nigeria, and most especially through development of domestic capital markets. And we think that is really, really essential to financing sustainably in the continent. Over the last 4 or 5 years, one of the pieces of work, you know, that perhaps, you know, we're most proud of, and which is really a reason that we've been engaged with a number of US entities domestically, beyond US portfolio investors who historically we've worked with, you know, over the last decade or thereabouts, is creating a local currency debt infrastructure debt fund, which we call the Nigeria Infrastructure Debt Fund. Perhaps the best piece of legislation that Nigeria has created over the last decade and a half is Nigeria's pensions legislation, which basically has taken a pensions industry which from a standing start of zero about 14 years ago, now has $25 billion of assets under management. 80% of that money was financing the government, mostly invested around government bonds and treasury bills. And when you think that the government as a factor of the economy here is only 7% of GDP, then to a large extent, you'll understand Nigeria and perhaps most of Africa's development conundrum, which is essentially, you know, that the private sector to a large extent really is starved of capital. So what have we done? We've created this fund. We've been able to attract 22 of Nigeria's pension fund investors who never ever invested in infrastructure, you know, to invest in infrastructure as an asset class. A US corporation, Cummins, you know, was our first investee, was our first investment for that fund. And that fund today is the only source of long-term local currency investing for infrastructure across the market. But that's really one good example of what is possible. Perhaps the biggest opportunity that we all have, and really for me, that opportunity that we have that can be transformational, and where both the US's, you know, Development Finance Corporation, as well as groups, you know, like NIDA, you know, which are financed by USAID, can play a really critical role, is recognizing that ultimately all of Africa's problems, to a large extent, have an infrastructure deficit underpinning. Whether we're looking at agriculture, where most of the agriculture on the continent is low value because we've got no electricity, no transportation, or cold storage networks, or we're looking even at the technology industry, where broadband, you know, effectively is a product, you know, for wealthy people, and looking at areas like education, where through COVID, we found essentially that there's an increasing delta being created between the ability, of the children of those that have to get a proper education because they have access to Wi-Fi. And that is a big differential for those who do not in public schools. Ultimately, we believe that solving Africa's infrastructure problems in a low carbon resilient approach, so basically also thinking about our climate footprint, can be really, really critical to transforming this continent over this next decade. And without wanting to hog the conversation, I'll share with you some of our thoughts about how you can create some kind of a bridge between the US markets and Africa around infrastructure.
Thank you very much, Bolaji. But I also want to stay with you just on this point of infrastructure, because you're absolutely right. I mean, we're talking about a $60 to $100 billion and potentially larger than that infrastructure deficit that's been estimated for at least the next 10 years. But, you kind of modestly swept over the fact that, and we've managed to crowd in, domestic pension funds that have never invested in the asset class before. And we've created infrastructure as an investable asset class, where we know globally and across the US, a lot of institutional investors, particularly pension funds, are really grappling with that. I mean, what are the lessons learned there, and how could that be scaled more?
I think this is really one of the most incredible opportunities that we all have. If we think about international investable capital, there's somewhere around $140 trillion of assets that sit in global asset managers across the world. Probably 25% of that today generating negative yield. If you could directionally point just 0.25% of that towards this continent, in other words, a number around $300 billion, you and I could essentially finance all of the SDGs for the entire continent. This is how significant the opportunity for us is. And I do think there's an incredible role that development finance institutions can play with all of their history and all of their knowledge around infrastructure investing, particularly on the continent. And if we can create a platform where the DFIs essentially are the first, movers to a large extent, and you can list that platform in a very large liquid capital market, potentially a destination like London. You then essentially create a platform which has the ability to attract billions of dollars of capital. And to a large extent, you are going to create something, quite transformational around financing infrastructure on this continent. And if we succeed in doing that, those infrastructure investments in turn will attract investments across a variety of sectors, from agriculture to retail to manufacturing, to mining, to education, to security even. When you sit and you think about security across the rest of the world, it's all about broadband and electricity. It's all about listening devices. It's all about cameras. Without broadband and electricity, to a large extent, weaponry, is the only asset you have in security. So every single problem you look at on this continent really speaks to the infrastructure deficit. And if we can begin to finance that using capital markets very sustainably, then I think we will change this continent over the next decade.
Absolutely. Couldn't agree more, Bolaji. And to that point, the African Union's 5% infrastructure or institutional infrastructure investment agenda is playing a very big role in that, where the African Union, I think TDB were part of the initiative as well, convened the leading African sovereign wealth funds and pension funds and entered into a pact where there's a commitment now under a new framework called the Institutional Investor Public Partnership Framework, which is much more aligned with pension and sovereign funds, investment mandates and risk-adjusted return criteria and approach, that the continental, and us from the continent, would be putting at least 5% of our assets under management to demonstrate that goodwill and leadership into these transactions and then go to the global markets. And we were actually looking for 1%. Your 0.25% is one number. We're looking for 1%. I think anything in between would make a very significant impact. But I think another area where we have great opportunity to have impact is in the agribusiness and the agri-food sector and food security related markets on the continent for obvious reasons. And I'm just going to leave Ndidi to tell us why that's such a good opportunity and introduce her business at the same time. Over to you, Ndidi.
Thank you so much. And thank you, Africa.com, and to the entire leadership for this great opportunity. I work in the agriculture and food landscape and wear a number of hats. I'm the co-founder of AACE Foods. It's an agro-processing company, which was started 11 years ago to source locally, displace imports, and address malnutrition. I'm also the co-founder of Sahel Consulting Agriculture and Nutrition, which works across the continent, really implementing ecosystem solutions in the dairy, cassava, yam, maize, rice value chains, and also helping shape strategy. And my most recent startup is called NourishingAfrica.com, which is envisaged as a home for 1 million agri-businesses, transforming this $1 trillion landscape. I strongly believe that Africa can nourish itself and the world. We're naturally endowed for agricultural excellence, and almost anything can grow on the African continent. And through the entire ecosystem, we recognize that there have been huge infrastructural and management challenges that have kept our sector from achieving its highest potential. But that said, 80% of the food eaten and grown in Africa is actually produced by African SMEs. And so they are the bedrock of this $1 trillion industry. I have worked through the different hats I wear with a few US institutions and have strong ties to the United States. When we were starting AACE Foods, we actually won the Africa Diaspora Marketplace competition, which was actually organized by USAID about 10 years ago, 11 years ago. And it was actually a really great initiative because it was connecting Africans in the diaspora with Africans back on the continent to start businesses. And there was a matching fund. I thought that was a great idea. And we're one of the few companies that have been selected and have proven that this model does work. We've also most recently partnered with the US Africa Development Foundation, which is run by Sigi Glynn. And AACE Food has benefited from some of the technical support from a range of US institutions. With Sahel Consulting, I work very, very closely with the Bill and Melinda Gates Foundation and a number of catalytic projects on the continent, and have also partnered with many US think tanks and land grants institutions, research institutions. And the key finding for me is that we haven't created almost a level playing field when it comes to food between the US and Africa. Many US institutions still feel that Africa should be a net importer of food from the US. And you see that with some of my exchanges with some of the farmer organizations. And I think there needs to be a leveling around food. We want to see food from Africa also being accepted into the US, high quality food that meets US standards. We want to see a lot more trade between African businesses, not just for raw materials, but also for finished goods. We have a very strong diaspora network in the United States, and there is huge demand for African food. And then the second is that I would love to see a lot more of the big development projects that USAID and other agencies are sponsoring on the continent, partnering with local institutions. We've seen a big desire to engage local institutions, but we haven't seen it at the level where local institutions are at the front, because that promotes sustainability, but also promotes ownership. And where there's ownership for some of these interventions, it survives beyond the life of the grant. And I'm sure many of you in the development community understand what I'm talking about. So I think there's a lot more that can be done there. And finally, I think there's a lot more partnership between African SMEs and US SMEs. What we've seen in the US is that the US was built on the backbone of agriculture, and agriculture is still such an important component of the US economy. And there's so much that can occur around knowledge transfer, best practices, and it can be both ways, so that Africa is also sharing some of its own innovations and best practices. Through NourishingAfrica.com, we currently have 600 active agri-businesses producing innovative solutions to solve some of the deepest challenges we have around climate change, adaptation, productivity improvements, processing, and clearly we have some of the best food in the world. And changing that narrative, but also building bridges between African SMEs and their US counterparts will unlock the potential in this for both continents and also create tremendous value for all the actors across the value chain. So I'm excited to see what can come out of some of these conversations.
Fantastic. And I just want to stay with you. I mean, just in terms of net importer or who supplies what, I think the what is important here. And I think we are really transitioning to hopefully away from this import substitution and conversation versus beneficiation. I mean, clearly we're in the beneficiation space, we're industrializing, we've now got a framework within the African continental free trade area. Do we need to change our pitch just a little bit?
So what I'm saying is this, you know, we still, I'll use Nigeria for example. Nigeria still imports quite a bit of soybean and maize from the United States, where we could be self-sufficient and we should be self-sufficient, right? And so if we're looking at the importation of primary almost commodities, and the exportation of commodities from Africa to the United States, that narrative has to change, where we should talk about value addition. So my company produces seasonings, spices, complementary food, and we have seen quite a bit of growing demand from US importers who want our finished product because it's high quality, but because African spices and Nigerian spices in particular are the best in the world. So changing that narrative where you're not exporting raw split ginger, but you're actually exporting jollof rice spice or pepper soup spice to the United States is the change in narrative that I'm talking about, and I agree with you. And I want that narrative to change because we're still very much still being viewed as a source for commodities, a source for cocoa beans and not chocolates, a source for tea, raw tea, and not brands, high quality brands from the African continent. And so changing that narrative, increasing the standards and the quality, and African entrepreneurs are rising to meet those standards and are producing products that are world-class. And I think that receptivity on the other side has to also be there.
Fantastic. Thank you very much, Ndidi. I saw a little bit of swaying back and forth from Kuseni, so I'm going to jump to Kuseni, who knows and leads one of the leading retailers in the continent, just to get not only your views on the overall question, but also to respond in part to some of Ndidi's comments that we were just talking about, that sort of changing the narrative and really balancing the supply and the demand related opportunity. Over to you, Kuseni.
Thank you very much, Hubert, and thanks to Teresa and the Africa.com team for hosting such an important opportunity for us to discuss Africa's future. I'd like to start by saying that the post-COVID environment provides an excellent and golden opportunity for Africa to reset its relationships with the United States in general, but in particular, business and investment relationships. I think that Africa can only recover from the ashes of COVID by leveraging its very unique and strategic relationship with the United States. In a country like South Africa, for example, US companies account for 10% of GDP, and they employ over 500,000 people. And as US Assistant Secretary of State, Ambassador Thibault Nagi said earlier on, US companies employ locals, they don't bring expats as other countries do. And as Massmart, we are owned by Walmart. Walmart owns 53% of our business, and we are very proud to have that kind of linkage with the world's leading retailer. We employ 48,000 people across 13 countries in Africa. We generate 93 billion rand in revenue each year, and we're looking at growing that. We're very passionate and committed to growing our footprint in Africa. We see Africa as our home. We want to partner with local suppliers. In response to Ndidi's point, it's something that's very close to our heart. In every market where we operate, we first look at local suppliers, and where we can find them, we partner with them. We have a three-pronged approach to relationships with suppliers. Here in South Africa, we have a supplier development program. The first objective in terms of our relationship with suppliers is to maximize local sourcing. from local suppliers. The second objective is to import substitute, reduce the value and volume of goods that we export from outside the market where we trade. And thirdly, is to assist those suppliers that have partnered with us, who have trusted us to be able to export their products to the global market. We are fortunate in being part of Walmart. Walmart operates 28 countries around the world, and we're working very closely with Bentonville in terms of opening up opportunities for African suppliers. In October last year, for example, we hosted buyers from Walmart's global sourcing team in Bentonville. They came to South Africa to meet with 18 of our local suppliers. Out of those meetings, 7 suppliers were earmarked as having products that Walmart is interested in. And we were very pleasantly surprised when one of the suppliers that is part of our Supply Development Fund, a company called Glenat, they manufacture Christmas crackers, and the Walmart buyers, they actually like their product to the extent that now their product is listed in 800 stores in Walmart US, which is much more than the number of stores that we have as Massmart in Africa. We've got 420 stores. By just partnering with us, now they've managed to access a much wider universe. And that's where we see ourselves being a real partner of choice and really executing on our philosophy of shared value in our relationships with suppliers, with local communities, with regulators, with our associates, the 48,000 associates that we employ. 95% of all our associates across all countries are local talent. We spend time when we go into a new market in investing in the development of local talent, because we don't believe in bringing experts in markets, because that's not sustainable. When it comes to categories such as fresh foods, for example, around 98% of the fresh food that you'll find in our stores in Ghana, in Kenya, Uganda, Tanzania, Nigeria, are sourced from local suppliers. It is our strategic objective to do that. We believe it makes strategic business sense. It simplifies the value chains. It lowers the cost of logistics. It resolves some of the issues around infrastructure that Admasu was talking about earlier on, in clearing of ports, inefficiencies in ports. So we have had to innovate to think strategically and think in terms of the long term. So we're really very excited with the opportunities that are there. We look forward to continuing to make sure that we are a partner of choice, and we want to reset the approach to small and medium enterprises. If you look at countries like Austria and Switzerland and Germany, they've got small and medium enterprises that are part of the global supply chains of blue chip Wall Street companies, FTSE 100 companies. I think African manufacturers and SMEs have got to move beyond looking just at the local opportunities or the national opportunities. We need to start thinking about the globalization of the footprints of African SMEs. Look at a country like South Korea, which is as small as South Africa, but there is no country in the world that doesn't have a Samsung product, an LG product from South Korea. As part of rebuilding from COVID, we need a fresh and creative approach to African industrial policy, to manufacturing strategies that start making Africans to think and aim to scale up, to be able to produce products for 7.7 billion people in the world, not just the 1.2 billion people, because we constrain ourselves when we look at that. And we also need to think about innovation. We have to think about the fourth industrial revolution, because the world is moving ahead. We cannot be spectators in those industries which are shaping the future of global commerce. We need to create the right ecosystems so that we can have our own African Alibabas, our own African Googles, Facebooks, and scalable ICT ventures, not just localized subscale entities. Thank you very much.
Thank you very much, Kuseni. I think your words are resonating not only with our colleagues in the US administration, but also your fellow panelists and SMEs are invigorated, hopefully, across the continent. And I think the way that we approach the African Continental Free Trade Area, every time we engage with heads of state in this conversation, we make very clear that it's transformative, and we completely support the acceleration and the implementation of that agenda to improve intra-African trade from the 14 or 16% to a much more significant percentage number. But our real focus, in addition to that, is to be able to leverage that platform to increase our less than sort of 2% share of global trade. So absolutely to your point, we certainly have to appreciate not only what the African Continental Free Trade Area is doing for us, which is to say, if I'm in Ghana, my market is not just Ghana, my market is the entire continent. But I think we just need to tack on to that. You know, if you're sitting in Nigeria, your market is not just the entire continent, it's the globe. And I think the more we can create that market infrastructure to accomplish that. And then, as you say, digital plays a critical role. So I'm going to turn to Iyi now, because I've heard certain people describe him as Africa's Zuckerberg. So let's hear from Africa's Zuckerberg. Over to you, Iyi. You may be on mute, Iyi.
Yeah, hello, sorry, apologies. I was struggling with the technology for a bit there. Okay. Almost started talking.
Spoiled my big intro.
Yeah. Sorry, yes, absolutely. I can see your video. Can everybody hear me now?
Yes, we can. Thank you.
Absolutely. So my name is Iyinoluwa Aboyeji, as was earlier mentioned, and for the last 10 years, I've been building technology companies across the continent and now investing in them. I spent quite a bit of time building two of the fastest growing companies on the continent, Andela, which was basically focused on helping talented young people in Africa to be able to become software engineers who work with global companies from all over the world while they remain right here in Africa. And then afterwards, I founded Flutterwave, which helps global US companies in particular to build businesses, to build businesses across Africa by being able to accept payments. We work with brands like Netflix, Uber, helping them accept different African payment methods, as well as helping local businesses accept global payment methods from all over the world. I think from my perspective, a big part of the collaboration that folks like me have enjoyed with the US over the last 10 years has really been in the strength of our diaspora. And it's something that I consistently say that Africa in particular has one gift to give the world in reality, and that is its human capital. While everybody tends to focus on natural resources and other elements, I think Africa's human capital is extremely beautiful and is the major, would I say, contribution to our partnership with the United States. As you know, Nigerians in the United States do comprise some of the best educated and are eager to contribute to national development. And it's what has influenced kind of my path now with Future Africa, where what we do is we work with diaspora from all over the world, particularly in the US, as a US registered Securities and Exchange Commission's exempt company, to accept payments, investments from these investors to invest in African innovators that are helping turn Africa's challenges into global business opportunities. Over the last quarter, in partnership with US institutional funds, we've raised over $1 million for early stage companies in Africa. And we've also backed about 15 companies over the last quarter alone. But over the last 5 years, we've backed about 32 companies. Those companies have gone on to raise $300 million, mostly from the US, and then also gone on to, they're worth a total of $1.2 billion. And they've created about 12,000 jobs since they started. So I think the beauty of our partnership with the United States has been in our ability for our diaspora to transfer not just financial capital, but social capital, as well as human capital from the point of view of technology and knowledge transfer to the local populace. So I think that's something that we need to strengthen in a very strategic way. And some of the ways that we've thought about strengthening it is in really thinking about what can the US contribute to Africa and making Africa a technology powerhouse in the digital economy. And I specifically speak to the Nigerian experience. And when you look at the World Bank's report on the digital economy key indicators, what you will find is that we have a bunch of indicators. So at the bottom, you have digital infrastructure and digital platforms. Digital infrastructure, things like power, things like internet, things like roads, if you can think about those as part of enabling logistics for the digital economy and many other things. On the other hand, with digital platforms, you have data, you have identity, and many other things that you need. Layered on top of that, you have digital financial services. And then on top of that, you have digital skills and digital entrepreneurship that are enabled by digital financial services. Now, what we're looking for more support on, and where I think there's a strategic imperative for the US to partner, especially given there is the China option, is in helping the government as well as business owners to be able to solidify Africa's digital infrastructure and digital platforms. And there's a lot of work going on there. If you, the Facebook and Google have both launched subsea cable projects into Africa. And there are a lot of US companies that are currently through the Power Africa program working on solar to make sure that despite the challenges with the grid, we can have centralized power across the continent. So the right steps are being made, but I think it's important to accelerate some of those moves and work much closer in partnership with local entrepreneurs to be able to enable it. The second thing is really, how can you create a safe space, a safe policy space for startups? Because one of the challenges that startups have faced, quite frankly, is the fact that the political atmosphere does dictate the policy, as opposed to the policy to some extent being recommended by experts. And it's going to take a long time to change that. So how do you create a safe space for young people, particularly those in the technology space, to create a cluster where they can be enabled? And I think that's really going to have to come through free trade zones and charter cities across the African continent. You can create these cluster spaces that can attract talented young people, human capital, and that can export human capital to the rest of the world, particularly to large US companies in the area of, for example, machine learning, training, or AI, and things like that, where there's a natural partnership between US technology companies and African talent, which is currently budding but could be encouraged. And then I think finally, there's a real conversation to be had about the laws and formation. And I think it's a conversation to be had on both sides, as well as a conversation where the US government can play a huge role in educating our governments about what is required. Today, the vast majority of successful technology companies, including two of the ones that I founded, are Delaware companies. They're US companies, but they have all their operations in Africa. I think that's a good start, but I think that's not sufficient. And over time, those companies successful African companies should be able to domicile in Nigeria. And that's going to be a function of educating and supporting efforts to create the right kind of structures in Africa that are comfortable for US investors to be able to invest, because it's not sustainable for Africa to continue to do that. And then I would like to also, on the policy angle, also echo Mr. Bolaji's points about unlocking local capital. One of the things that we're trying to do is to get the president to sign the new BOFIA Act, which would allow banks to unlock at least 10% of their assets to invest in up to 40% of commitments in a venture capital firm. I think when that's done, you're going to see us unlock more local capital. And then most importantly, just continuing to harp on the need for the politicians and leaders of Nigeria to abide by the rule of law. One of the issues consuming the tech community.
Fantastic. If we can come back to you in the next sort of passing round, but excellent suggestions. And I certainly think it's going to be boosted by the fact that the African Continental Free Trade Area's e-commerce protocol, which was slated to be negotiated in 2022, has now been accelerated on the back of private sector engagement to now take place in 2021. So there's a real opportunity to leverage the African Continental Free Trade Area and the e-commerce e-commerce and the digital and e-trade protocol to accomplish a number of those different issues. I'm now going to turn to our dear sister Naa-Sakle to just tell us a little bit about her story and share her views, you know, in this particular subject. I mean, you've got a great and interesting model and market. Over to you, Naa-Sakle.
Hi, thank you so much. So as a Ghanaian, so far, I have to take issue with one point from today's panel. Ndidi, your view that Nigerian spices are the best, I do not think is true, but thank you for your views, and thank you to Africa.com for including my voice. So I'm from the shea butter industry. That's about over a $1 billion industry, primarily in the form of raw shea butter, which increases dramatically when considered as kind of a pro rata portion of consumer finished goods, which I think is an interesting perspective, especially when considering Bolaji's point on infrastructure being a root issue in Africa, that shea butter on its own is 1 billion, but thinking about shea butter in soaps and lotions and shampoos, obviously that kind of explodes really, really rapidly. So that's on the economic side of things. In terms of like the impact of shea butter on the continent, that's something that about 16 million women across sub-Saharan Africa use to support their families and their communities. And Mother Shea Limited, of which I am the CEO, is a small and growing SME within that. So we are a vertically integrated shea butter manufacturer with about 50 employees in Ghana. Started with relatively modest roots, from 50 pounds in 2000 to hundreds of tons today. My mother, the kind of legacy roots of the company, was president of the Global Shea Alliance, so really involved in the shea space and sustainability. And we consider the quality of our products and the sustainability of our products, as well as our social impact, really key integral pieces to facilitate that trade between Ghana and the US. So we partner with about 10,000 women in Northern Ghana, provide them with training, buy nuts from them, make shea butter in Ghana, and then ship that shea butter to the US primarily. And I think that one key differentiator between us and other companies is that oftentimes shea nuts are purchased from the continent and then shipped to Europe, where they are then refined. And that, because of the yields between shea nuts and shea butter, often leads to about 2/3 waste getting transported. So that is kind of a quick overview about us. Thinking about the specifics of our relationship with the US. First off, we are so grateful to be a recipient of a US ADF grant. So thank you, CD, and the entire ADF team. Beyond that, the shea butter that we ship from Ghana to the US gets used either in finished goods or directly to consumer or in B2B trade. So on the finished goods side, we have 2 brands. One is called Eugenia Shea, which is sold in Anthropologie, Urban Outfitters, and Macy's. And then the second one is kind of an affordable luxury product that's sold in Target. Then we also sell both lines through our D2C website. And then, as I mentioned previously, B2B to brands and distributors. And then finally, when I think about kind of business opportunities and challenges with doing trade with the US, I think the infodemic that you mentioned earlier is not just a risk of doing business, but there's also kind of a duality of perception regarding African products. And on the one hand, you know, African products are sometimes perceived as low quality products to be avoided at all costs, which is obviously problematic. On the other hand, they're perceived as, again, unfortunately, low quality products that are to be purchased as a form of charity. And I think that our company, as well as it sounds like many SMEs, both in our space and other spaces, aim to dispel those myths by providing high quality products, in our case, moisturizers, that are effective and also have purpose. So we are a social enterprise rather than a charity.
Okay. Wonderful. And I think that's the narrative. That's absolutely the narrative in terms of I think as the administration and the heads of the agencies in the last panel mentioned, there is this important transition from the aid conversation to the trade conversation. Where we sit, it's very much transitioning much more from aid to trade to institutional investment, and then reversing that back into portfolio companies that have a co-investment and buy and supply relationship between the continent and the US. I'm mindful of time. I'd very much like you to, in 30 seconds, each of you, let's show how sort of agile and dynamic we can be. In 30 seconds, just sort of give us one top priority business partnership proposal that the audience and the US administration can take away that you would prioritize and recommend and get involved with as an outcome from this particular dialogue, and taking advantage of this particular moment of stronger and sort of more forward-leaning US-Africa business partnerships. Your 30 seconds, Admasu. You're on mute, sorry.
Yes, can you hear me now?
Yes, I can.
Lovely, lovely. Well, in a nutshell, we have been supporting US investment in Africa. We've been doing that with African capital and global capital. We think we can do much more if US capital comes to the party better. We do work very closely with US Exim, USAID, Citibank, and the like, but we think they could do more with us if the US government reaches out and also embraces African financial institutions, so that we can also do more on the ground here in Africa with American businesses. Mm-hmm. I have several US clients who were in difficult situations and they had no bank to support them. And we did that because we believed in them. But in many cases, for multilateral to do that, you need to have US capital in you in order to step out and do that. So I just think there's a lot more the US can do to partner with African financial institutions.
Fantastic. And I'm sure that you will create that pipeline. And I'm now going to quickly go to Ndidi. And we're just going to go around this very, very quickly. 30 seconds. I'm going to be a bit tight on that. Clock's ticking. Thank you.
I would like to, yes, thank you. I would like to see a scaling of Africa Diaspora Food Initiative, primarily focused on changing the narrative about African food and also creating very easy opportunities for African processed and packaged food to be sold in the US.
Thank you very much.
Sorry, thank you.
Oh, no, perfect. Wonderful. So let me just check in with our host. Is there an opportunity for the other speakers to do their 30 seconds, or do we wrap it up right now in the interest of etiquette?
It's a real 30 seconds.
Okay, wonderful, wonderful. So E, over to you for your 30 seconds.
Yeah, I think there is an opportunity for the US government to collaborate with the technology community to build specialized economic zone or free trade zones for the technology cluster. It's going to solve a lot of problems, including safeguarding talent, enabling capital importation, enabling the development and progress of technology with African talent, and ultimately getting a foothold on the rest of Africa.
Well received. Naa-Sakle, over to you.
All right, incentivizing US organizations to do business with African ones by an African certification program, similar to like women-owned businesses or minority-owned businesses. Thanks.
Nice and succinct, thank you. Kuseni?
There is an opportunity for the US to share its playbook on global competitiveness with African businesses so that African businesses can produce world-class quality products that can play a very leading and prominent role across the entire world, not just between Africa and the USA, but looking at 7.7 billion people in the world.
Thank you very much. And to bookend us, Bolaji, the last word is yours.
The US's pension funds and institutional capital have significant excess capital hunting for yield. Africa's infrastructure and Africa's development needs literally can provide an incredible home and opportunity. And I think that the US government agencies and development finance institutions have a critical role to play in creating that bridge. Thank you.
Thank you. That's a beautiful bridge, because not only can US pension funds co-invest in Africa, but on the continent, we also have international allocations, and we can also co-invest with the US-based pension funds into the US. Over to you, Teresa. Thank you, everybody. Excellent discussion.
Hubert, thank you very much for moderating this conversation. And I want to just thank all of the panelists on this. And this is the moment when we should all be on stage taking a picture together. And I should be giving you a little gift of some kind to remember and acknowledge your effort. So seeing as we can't do that, then today I would like to let you know that Africa.com will be making a contribution in your individual names to the Student Sponsorship Program of South Africa, an organization that is making a huge difference in building the pipeline of leadership for that country. So that will be our gift in honor of the contributions that you've made to this session. I'd like to acknowledge one more time our sponsors, and thank you to General Electric, to Bank of America, and to Covington for your contributions making this event happen.